Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena as usual. Let me quickly take you through all the global markets rather than me. I'll allow Ankita to do that. So Ankita, talk to us about what US and European markets are up to these days.
Good morning to you, Harsh. Now, after a kick-ass budget yesterday, now the Federal Reserve also gave in what the investors were really penciling in already, a 25 bips rate hike. So yesterday, the Federal Reserve raised its benchmark interest rates by 25 basis points and gave little indication that it is nearing the end of its rate hiking cycle. Now, this move came in line with what the market was really expecting, and especially with the Fed Chair Jerome Powell saying that if they do see the inflation coming down much more quickly, it will play into their policy setting. Now, this the investors saw as more dovish than hawkish. Now, stocks gained on the back of this dovish commentary in an intraday turnaround. The S&P 500 gained almost 1%, reversing an earlier decline of 1%. The Nasdaq Composite added 2%, boosted by gains in chip makers following strong earnings from advanced micro devices. Meanwhile, the Dow Jones Industrial Average rose 6 points or was largely flat in trade after sliding more than 500 points at the day's lows. Now, European markets were rather mixed. The Pan-European Stock 600 ended the day almost flat. DAX was up 0.3%. CAC was largely flat but was in the positive territory. FTSE was down 0.1% in trade. So a mixed reaction there to the Fed's commentary. So that was the roundup of the US and the European markets. Harsh, tell us how are the crude faring?
Well, yes, when I'm looking at crude, Ankita, we're seeing a bit of a slide again on crude. In fact, WTI around that $77 a barrel or thereabouts. And that's on the back of a larger than expected crude buildup that's come through, at least in the US. So you're seeing, some 4.1 million barrels of crude that has been built up over the week ended 27th of January. And, that takes the crude stocks in the US to 452 million barrels, which is much steeper, or rather slightly steeper, around 10% steeper in terms of the rise than was earlier penciled in, and that's really kept pressure on crude. But of course, the 25 bips hike has already been built in, but that kind of provided a bit of relief to oil, at least yesterday, and that's why oil is settling in around that $77 a barrel as we go into the open. The other piece that's also played out, Ankita, is that we're seeing the dollar index come off quite sharply, and that has added to the pressure on crude. Mind you, crude and dollar index are inverse typically as they work. So that withdrawal in the dollar index is also the other piece that's keeping pressure on crude oil. These couple of factors really playing out, and crude oil therefore seeing a bit of a dive but seeing a bit of a recovery as well in early trade today.
All right, Harsh, thank you for that roundup. Let's quickly look at the events that we need to track today. Now, we have US's initial job claim data that's likely to come out today. And of course, after the Fed's rate hike decision, we also have UK's Bank of England rate decision that is likely to come out, and also the Eurozone ECB rate decision. Well, the markets are penciling in a 50 bips rate hike. Now, let's see if this also falls in line with market expectations. So that you need to keep an eye out on. And also, in India, we have the earnings season going on. We have HDFC, Tata Consumers and Titan that's likely to come out with its Q3 results as of today.
Well, and with all those cues, let's also talk about the Federal Reserve, which has of course hiked interest rates yesterday. And it raised its benchmark interest rate by around 0.25 percentage point, giving little indication that it is nearing the end of this hiking cycle. Aligning with market expectations, the rate setting FOMC boosted the federal funds rate by 0.25%, and that takes the target range of the federal funds rate to 4.5 to 4.75%. That's the highest funds rate since the October of 2007. The Fed Chair Jerome Powell said that they do not see this as an appropriate time to pause and don't expect it to happen anytime in 2023. He reiterated the Fed's commitment to bringing inflation back to the 2% goal. The move marked the 8th increase in a process that began, of course, in March of 2022.
I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly, and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. The committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
And well, Double Line Capital CEO Jeffrey Gundlach said he sees one additional rate hike from the Federal Reserve before the central bank ends its tightening cycle. He also said that Powell was referring to the Treasury inflation protection securities when he mentioned positive yields during his statement.
Well, and sticking to global macros, inflation in the Eurozone dropped for a third consecutive month in January on the back of significant fall in energy costs. Headline inflation in the Eurozone came in at 8.5% in January. Energy remained the biggest cost driver in January, but once more softened from previous levels. Energy changes fell to an estimated 17.2% in January, down around 25.5% in December.
And Meta shares soared in extended trading after the company reported fourth quarter revenue that topped estimates. The company also announced a $40 billion stock buyback. The company also reported restructuring charges for its family of apps segment and Realty Labs unit. Now, however, revenue in the fourth quarter fell 4% from the year earlier.
Well, and let's now talk about Myanmar's junta has extended a state of emergency that's been in place since it seized power in a coup 2 years ago. The emergency was extended by another 6 months. This takes it beyond the constitutional limit. The move signals that a general election will also be delayed.
And AMD reported fourth quarter earnings beating Wall Street expectations for sales and profit. However, the company guided analysts to a 10% decline on a year-on-year sales in the current quarter. The company also said it expected its adjusted gross margins to be about 50%.
Well, with that, we'll slip into a very short break. More, of course, on the domestic side. On the other side, don't go anywhere. Welcome back. You're watching Market Cafe on ET now with Ankita and myself. Let me quickly take it straight to the budget. That's the key cue which is there this week, especially for Indian markets. And one of the large, or rather big impact announcement that came through yesterday was with regard to life insurance companies. The 80C phase out, of course, is one piece of the puzzle. The other piece of the puzzle is, of course, how life insurance is going to take up the new 5 lakh rupee threshold to levy tax on the redemption payouts which are going to happen from life insurance companies. And we spoke with the LIC MD, Siddhartha Mohanty, on how this could impact insurers. Listen in to his perspective.
There has been some modifications in 1010D. Now earlier 10 times premiums, 10 times sum assured, those were not taxable and exemption was there under 1010D. Now that has been changed, and any individual paying total aggregate premium in a year 5 lakhs or more than 5 lakhs, so that maturity pursuit will not get any exemption, which was earlier available under 1010D. So that is precisely the present change.
Well, yesterday in the budget, it was clearly a major dampener for the insurance companies that were down almost 8 to 12% in trade yesterday, that Harsh very closely tracks. Now, the budget also announced a new tax regime. Well, what does this new tax regime look like, or will it be a game changer really? Listen in to what Rajiv Chandrasekhar had to say about this new regime.
Look, I think the Honorable Finance Minister said very clearly that the new tax regime is going to be the default tax regime for all taxpayers of this country. And clearly in this budget, the ceilings and the exemptions that have been raised make the new tax regime very, very attractive. For those taxpayers who want to continue to rely or use the old tax regime and have exemptions and other write-offs that they want to use, they can continue to do that. But the government has signaled that it is clearly signaling a tax cut for the middle class, especially the middle class that is using the new tax regime.
Let's quickly move on to news coming in on the domestic front. Now, of course, the union budget came out yesterday and clearly pretty much in line with what people were expecting and a little more than what people had expected. Now, we also spoke to the Union Petroleum and Natural Gas Minister Hardeep Singh Puri on it. Listen in to what he had to say.
इस बजट में कई फोकस है. ग्रीन एनर्जी ट्रांजिशन इज वन ऑफ द फोकस. इसमें से ये 35,000 करोड़ की जो एलोकेशन, दिस इज वन सच एलोकेशन. इसमें और भी चीजें हैं ग्रीन एनर्जी के लिए. ये 5 साल के लिए है. 5,000 करोड़ इसमें है आपके लिए स्ट्रेटेजिक पेट्रोलियम रिजर्व के लिए. 30,000 करोड़ है कैपिटल एक्सपेंडिचर और उसके लिए. ये दिस इज a beginning. Abhi, it is, if you read the language very carefully, this is our journey to net zero 2070. So this is the first year. अगले साल और होगी. इसकी रिक्वायरमेंट क्यों हुई? इस समय जो हमारी ऑयल मार्केटिंग कंपनीज हैं, वो इस समय उनकी इंपोर्ट्स, उनकी रिफाइनिंग, वो ट्रेडिशनल फॉसिल फ्यूल्स में. अब हम एक्सपेक्ट करें कि दे विल मेक द ट्रांजिशन एंड दे विल गो टू ग्रीन एनर्जी. अब जैसे एक हमारी कंपनी है जिसकी 11 रिफाइनरीज हैं. अभी कुछ महीने पहले उन्होंने सेकंड जनरेशन एथेनॉल का प्लांट, मेकिंग एथेनॉल फ्रॉम पराली और एग्रीकल्चरल वेस्ट पानीपत में लगाया है. अभी और कंपनीज कर रही हैं, बैम्बू से बना रही हैं. तो एक ट्रांजिशन हो रही है ऑलरेडी. इसमें ये जो 35,000 करोड़ है, इसमें उसको फिलिप मिलेगा और इंकरेजमेंट मिलेगी. और इसमें प्राइवेट सेक्टर से भी बहुत इन्वेस्टमेंट आ रहा है, बाहर से भी इन्वेस्टमेंट आ रहा है. सो ऑल दैट इज इट इज अ वेरी गुड, फील गुड एंड अ स्ट्रॉन्ग बूस्ट फॉर द एनर्जी ट्रांजिशन.
Budget has also made some provision with regard to compressed biogas production. So how it will going forward?
देखिए, compressed biogas is an area which the potential stands demonstrated. Last year we took a decision during my time कि हम जो रेट है कंप्रेस बायोगैस का वो 46 रुपए 46 रुपीज किलो से उठा के 54 रुपीज किलो करेंगे. अभी एक बहुत इंपॉर्टेंट अनाउंसमेंट है बजट में कि कंप्रेस बायोगैस की जो ब्लेंडिंग है वो 5% तक मैंडेटरी कर दी जाएगी. और उसके साथ एक जो हमने इशू फ्लैग किया था कि जो FOM है, फर्टिलाइजर मैन्योर, देखिए जो कंप्रेस बायोगैस में इन्वेस्टमेंट करता है, तो एक तो कंप्रेस बायोगैस जो निकलती है उसको बेचेंगे, साथ में जो FOM निकलता है उस पर अगर हम एक पॉलिसी बना ले तो देन इट इज अ विन विन, 100% अश्योर्ड. तो आज मुझे बहुत खुशी हुई ये देख के the Honorable Finance Minister has put in a formulation that we will address this issue and devise a policy, which we will do very quickly.
Right, everyone's in energy transition mode, and so are we. Good to see a lot of that translating in the budget as well. Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through what's happening in Asian markets. We did see US markets, gain in trade after that FOMC meet, as well as the rate hike, as well as the commentary. Quickly talking about what the futures are doing. In fact, the Dow futures are down 0.5% as we speak. So note that out. The S&P 500 futures, in fact, and the Nasdaq futures are in the green though. So that's a key positive. Where Asia is concerned, you can see the Nikkei is up around 0.25% or thereabouts. You can see the ASX 200 also up around 0.33% as we speak. The Hang Seng is up 0.75%, so that's a positive as well. Kospi coming in higher around 0.25%. And the Shanghai is probably the only Asian index trading in the red at the moment, down around 0.25%. In fact, it's just turned green, so around 0.1% in the green, the Shanghai index as well. So we're largely seeing green, but you look at the SGX Nifty, it's down around 0.75% as we speak, down 100 plus points, slipping into that 17,500 zone. So have to, of course, wait and watch how markets open after the budget. But at the moment, it's indicating a 0.75 percentage point decline. So,
all right, Harsh. So decline is the word coming in from Harsh. Now it's that time of the show when we get you all the stock-specific news and the stocks that you need to watch out for in today's trading session. We have with us Ashesha in the studio. Ashesha, good morning. Tell us, what are the stocks that the investors need to keep an eye out on?
Hi, good morning. So Reddington will be the first one in focus in today's trading session. Remember, they reported their numbers yesterday post market hours, where revenue for the quarter gone by stood at 21,600 crores. An uptick of nearly 31% is what we saw on the revenue front on a year-on-year basis. As far as margins are concerned, they did decline a tad bit. They've come in at 2.7% this quarter versus 3.2% that the company reported same time last year, indicating a contraction of nearly 50 basis points on a year-on-year basis. Moving on to Prestige Estates then, remember operational data for the quarter gone by was released by the company yesterday post market hours, and the company has registered sales of nearly 2,520 odd crores and collections of nearly 2,293 odd crores. Average realization for the quarter gone by stood at about 9,400 rupees per square feet. Moving on to Railtel then, order win coming their way. The company has informed the exchanges that they have received a work order from State Bank of India for provisioning of 4G connectivity for offsite 15,000 ATMs and for maintenance for a period of 5 years. And the project cost stands at about 253 odd crores. On the back of this order win that has come in, keep an eye out on Railtel as well. Moving on to Tata Chemicals then, on the back of its numbers, where revenues came in at 4,150 odd crores versus 4,200 crores on a quarter-on-quarter basis. A marginal decline is what we have seen. Margins meanwhile have expanded. They've come in at 22.2% this quarter versus 21.7% that the company had reported in the second quarter. HDFC First Bank will also be in focus. The Board of Directors will be meeting on the 4th of February to approve the proposal for raising of funds by way of issue of equity shares on preferential basis. So on the back of that, keep an eye out on IDFC First Bank as well.
Well, thanks for all those possible buzzers, Ashesha. But let's quickly go on. There were two sets of big news items which came in yesterday. One was, of course, the budget. The other was that Adani Enterprises has decided to withdraw its FPO, and that happened late last night. Let's go straight across to Somit for more details.
Well, it was the largest FPO of India that has been withdrawn. Adani Enterprises FPO of 20,000 crore rupees. Now, the company had given a price band for this FPO at 3,112 to 3,276, and it had already raised close to 6,000 crore rupees from anchor investors and close to 3,680 crore rupees from one of the bigger investors, that is IHC, apart from the anchor investors. Now, if you see the subscriptions, the total FPO was subscribed 1.12 times, with most of the subscription coming in from the NII portion, close to 3.32 times oversubscribed, that is the NII portion. However, the retail portion was very understandable is subscribed just 0.12 times. But what is the main reason why this FPO was called off? It was a sharp fall in the share prices of Adani Enterprises that we have seen. Now, since January 24th, that's when the Hindenburg report was out. If you see the share prices of Adani Enterprises, they are down nearly 38%, and compared to the FPO price band of 3,276, the current market price is nearly 33% lower. And to protect the interest of the investing community, Gautam Adani decided to call off the FPO of 20,000 crore rupees. Now, they gave a couple of quotes where he's saying that the market has been unprecedented and the stock price has fluctuated over the course of day, and that is the bigger reason why they have called off for this FPO. Now, why was this FPO done? Now, the company had raised funds for the capital expenditure purpose and to repay debt of 3 of these entities, that is the green hydrogen business, the airport business, and the road project business. And also, if you see, analysts assign most of the value of Adani Enterprises to these 3 key businesses. Now, if you see Adani Group's, the entire group's market capitalization since January 24th, on January 24th, if you see the market capitalization of the group stood at close to 19.4 lakh crore rupees, which has now slid to just 11.8 lakh crore rupees, and the peak market cap once in September 2022 stood at close to 23 lakh crore rupees. So we have seen a sharp fall in the group's value over the period of time. And Gautam Adani, who was once the second richest in the world, is now the 13th richest. That's a sharp slip in ranking that we have seen, and the wealth that Gautam Adani has lost just in the first month of this calendar year, that is 2023, is close to 48.5 billion US dollars.
Well, thank you for this detailed roundup on Adani, Samit. Now, we'll stay with Adani. We spoke to TV Somanathan, Finance Secretary, and Sanjay Malhotra, Revenue Secretary, to decode what they think about the exposure to Adani Group companies for banks. Listen in to what they had to say.
I will only speak from the point of view of the banks, the financial institutions. I am not here to comment on the finances, good or bad, of any private sector company, not my business, not something the government's business either. But just in terms of the banks and the financial institutions, I think the exposure to any one company is so small that to connect the fortunes of any one company with those of either LIC or nationalized banks is, I think, not very justified or rational. I think the total exposures are small, and yes, there are always companies that do well and companies that do badly. Institutions spread their investments across a big portfolio, and I think there is less than 1% concentration of any one company at this moment, which in the portfolios of any of these financial institutions. So I don't think that's a big enough concern. In fact, I don't think that is a reason for influencing the prices of public sector banks in the days to come. So okay. I personally don't think that's a valid, logical chain of reasoning to connect a particular company with the fate of our public sector banks. I think the numbers involved are too small to make such a connection.
And if I may add, the valuation of a company has got nothing to do with whether or not, on its ability to repay a loan. Its ability to repay a loan depends on the profits, on the cash flows, which the banks believe are sufficient. The valuations is what, the markets are looking at. It's not the cash flows, and the cash flows are looked after, by the banks.
Okay.
So there's a difference.
Because we have spoken to LIC as well as SBI on record, and they have reiterated that they are not concerned about the exposure.
About the valuations. They are not concerned about the valuations because that
not about their
them.
exposure. Not about their exposure.
Yeah. So then, what we are seeing, does the Adani Group have merit in saying it's an attack on India?
I will not comment on the views of individual private sector companies. You have to ask them.
Well, sticking to this, because it's going to play out today, we also spoke to Christian de Guzman, who's the Senior Vice President at Moody's Investor Services. Mind you, that's the rating agency, who thinks that India's economy and financial sector is also large and thereby resilient. Listen in to what he had to say.
From a sovereign and macro perspective, what is happening with the Adani Group perhaps has a limited bearing on that overall picture. Yes, Adani is a very large company, but the Indian economy is that much larger. The Indian financial system is that much larger. So we don't necessarily see this yet as a material risk to either.
And well, the earnings season is going on and all eyes will be on Tata Consumer as it is set to report its third quarter earnings as of today. Now we are expecting a subdued volume growth in food and beverages business. My colleague Winnie joins in for more details on that. Over to you, Winnie.
Absolutely. In terms of Tata Consumer's numbers, we are expecting a mild revenue growth of around only 7% coming in this time, while the profits of the company are expected to see a 6% decline, and margins also we are expecting to see a contraction coming in terms of margins as well. So keep an eye out on the EBITDA margins. We are expecting them to be at around 13.1% versus 14.4%. So yes, almost we could say 100 basis point contraction in terms of the margins. Now growth this time also is going to be a pricing led growth. Volumes are expected to be subdued both in the Indian beverage business as well as the food business of the company as well. Value growth of the food business, we are expecting it to be around somewhere in the 20-25% range, mainly because they've taken price hikes in the food business, so that is supporting the revenue growth of the company. Commodity cost obviously in the international market had impacted them even last quarter. This time also, yes, it's impacting them year-on-year basis. Sequentially, maybe we could see an improvement coming in over there. So that is the factor that comes into play as well. And obviously, overall, given that the gross margins are under pressure, there's a geographical adverse mix coming in as well. That is impacting the EBITDA margins of the company. And that's why a contraction in the EBITDA margins. Let's keep an eye out on the commentary, demand environment, how is that shaping up, out-of-home consumption, tea prices and the volumes that they're expecting there. Any commentary coming in on the raw material pricing is an important factor to watch out for here.
Well, Vinny, stay with us because you're going to have a busy day. Dabur is also all set to report its Q3 earnings, where revenue is expected to jump. However, PAT and EBITDA are expected to decline year on year. What's the street expecting? Talk to us.
We do have a fair idea of what to expect because we have a Q3 update coming in where they said, the volumes are expected to be subdued here as well. We're expecting the volume growth is going to be actually seeing a decline this time. So negative 1% is what the volume is expected to be at. Revenue is expected to see a growth of around 5%. Profitably down by 6% for Dabur is what we're expecting. And margins also expected to see a contraction of around 200 basis point coming in at 19.3%. Now, obviously, when you look at the gross margins of the company also, that will also be under pressure on a year-on-year basis. Sequentially, obviously, most companies are seeing an improvement because commodity prices have improved sequentially. But keep an eye out on that because margins, gross margins or EBITDA margins are going to be under pressure whatever you look at it because of the inflationary trends that had continued last year as well. Higher packaging cost is obviously a factor coming into play for the EBITDA margins. Let's keep an eye out on commentary coming in on the rural growth, wholesale channels, consumer preferences towards the Ayurvedic and natural side as well. What is in terms of the healthcare portfolio growth over there are key factors that we're keeping an eye out on.
Well, Winnie, just hang in there because Titan is also set to report its Q3 earnings and you have all the details. So take us through what it looks like.
The jewelry retailer Titan, obviously let's not forget jewelry segment accounts to 80% of the business. So what we're expecting and obviously what the company gave in the Q3 update is the jewelry segment is expected to see an 11% growth coming in. Watches and eyewear segment is also expected to see a decent growth coming in. So overall the revenue growth is expected, what we're expecting is expected at around 15% is what we could say coming in for the company. Profits expected to see a mild growth of around 5.5%, while margins expected to see a contraction this time as well. 13.6% is what we're expecting the EBITDA margins at, around 100 basis point contraction over there. Growth mainly in the jewelry segment was why? Because of the wedding season that was there, festive season that was there in Q3, and overall the store expansion strategy of that is worked out well. So yes, that is keeping jewelry segment a beat and that is what is overall supporting the growth. Other than that, the strong buyers, healthy store expansion, and that is something that is driving the performance of jewelry segment as well as the overall business. EBITDA margins declining because of the, despite the improved salience, because of the weakness in the operating leverage. So keep an eye out in terms of the factors, demand trends, outlook on international business, what are the expansion plans there is something we're watching out for.
Well, thanks so much for all that download that you've given us on all those FMCG companies, Vinny. Let's quickly move on though. Vamakshi has been sifting through all the brokerage notes that have come through today. Good morning, Vamakshi. Talk to us about the major ones that you've been reading up on.
Well, absolutely. Very good morning to both of you all. And let's first start off with insurance stocks because those stocks took a really bad hit yesterday. Now, we have a note that has come in from Macquarie, and what Macquarie is highlighting is that for ICICI Prudential, less than 5% of APE comes from high ticket policies. For HDFC Life, however, the number is higher, that is, more than 10% of APE could be impacted. But for SBI Life, the APE is less than 1%. So overall, when we look at the life insurance companies for SBI Life and ICICI Prudential, they're looking quite attractive given the sharp fall that we saw in the stocks yesterday. Apart from that, LIC also may possibly have a target segment buying policies for ATC exemption benefits, and that could be impacted a bit more. So those was the insurance companies for you. But now let's move on to a few FMCG names. We have Britannia in focus after the company reported its Q3 numbers yesterday. JP Morgan believes that the company delivered a strong margin delivery on account of an earnings beat. Standalone revenue growth continued to be quite healthy, driven by market share gains. Gross margin is for the company stands at the highest level, and that is mainly driven by pricing actions, RM inflation moderation, intensified cost efficiencies, etc. Sustainability of gross margins will be an important area to focus on in the earnings call. So overall, JP Morgan has maintained its neutral rating with a target price of 4,300 per share. And lastly, we will be watching out for Jubilant FoodWorks. JP Morgan believes that the quarter three was quite worse than the company had feared. The demand is looking quite uncertain, and on the back of higher COGS has weighed on the gross margins. New store additions are also dragging the PAT margin further, and on the back of that, they've actually gone ahead, maintained a neutral rating on Jubilant FoodWorks, and gone ahead and cut the target price from nearly 625 to 485 per share.
Well, thank you for that, Vamakshi. Do keep an eye out on all the stocks mentioned in the brokerages. Now let's move on. Sanjeev Bajaj, President CII and Chairman and Managing Director Bajaj Finserv Limited, shared his views on the budget. Let's go across to listen in to what he had to say.
Introduce Sanjeev Bajaj, the CII President and the top boss of Bajaj Finance and Bajaj Finserv. This is a budget which is growth oriented, which is going to give a big fillip to consumption.
Very much so, Nayantara. And not only is it a strong growth-oriented budget, but one that has also balanced the Fiscal Prudence Act. And some of the key recommendations that we just discussed earlier this morning, as you were saying, one was to take public capex to 10 lakh crore. That's exactly what has been announced. Second was to spur consumer spending by rationalizing taxes, especially at the middle class segment. That has again been announced. In addition, the focus on improving productivity and efficiency in the entire agri-supply chain, that's a welcome move as well. We've also seen increased allocation for various elements of the green sector as we move on the energy transition side, and the support overall to the masses. So this is a budget that is growth-oriented, that is positive, and that is what a number of those recommendations were as suggested.
Do you predict a significant jump in credit offtake?
Keeping in mind that we expect, say, a stable external environment, very much so. You will start to see the, I would say, the force multiplier effect of these positive moves in the coming quarters.
Because it's not just a lot of announcements that were made around banks as well, but it's also being backed by cuts in customs duty. You've seen changes in indirect tax. And if you look at all of the items, these are all household, high consumption items.
And there are items where India is focusing on manufacturing that for India and the world, which is what they've done, the rationalizing of customs duty structure in number of items, removing the inverted.
Well, yes, that was Sanjeev Bajaj speaking about the budget, of course, which will be in focus even today.